Hi, Jonathan York, Bay Financial Partners, looking at investment markets. President Trump has now obviously been sworn in and taken office and wasted little time in sort of issuing executive orders. Obviously, the first ones to have come through, well, one of the major first ones that's come through has obviously been the withdrawal from the TPP. And it's going to be interesting now to see how the US sort of negotiates free trade deals going forward and what sort of conditions are placed on those. Market sort of reaction has been a little bit sort of muted at the present. It's certainly a little bit nervous. Small sort of increase in volatility. Earnings coming through have been sort of good and bad, and it's going to be very interesting to see how it sort of pans out over the next sort of 1 to 2 months. Once President Trump really gets his sort of feet under the table and really starts pushing through. US earnings a little bit mixed, but if you look at it on the whole, probably companies that are surprising a little bit on the upside just outweigh companies that have been a little bit disappointing, and that is expected to sort of continue over the course of the year with potentially more surprises coming through. So you're starting to see a little bit of growth coming through in earnings. But obviously that will be very interesting to see if that can continue, given the sort of change in the administration and, potentially Trump's policies going forward, which yet is still really yet to be sort of hammered out and really outlined in detail as to what they're going to entail. Oil sort of holding a reasonable bid. Certainly at the moment with the potential sort of infrastructure spend coming out of the US and the rest of the world's economy, it's sort of showing reasonable signs of growth and certainly pushing on a pretty reasonable rate. That should be reasonably supportive for the Australian economy. Resources and minerals sort of look in sort of pretty good shape, and it's going to be interesting to see how oil sort of trades if it can get above that sort of $55 a barrel. It's going to be very interesting to see how President Trump's sort of policies sort of pan out for the US economy. If you look at it at present, you've got an economy that's really very strong. You could even argue is running at pretty close to full employment. Starting to see a little bit of inflationary pressures coming through in terms of wages, and it's going to be interesting now to see how that sort of filters through, given the sort of changes he's proposing in terms of sort of making America great and sort of getting jobs back on US soil. And then following on from that, it's going to be interesting to see how that sort of then transposes into the Fed policy. Most people are looking for 2 hikes this year, more than likely going to be 3 as the US economy, say, really is pushing on at a pretty reasonable rate. And if you do start to see some inflationary pressures coming through, given the very low base you're coming from interest rates, interest rates do need to be higher than they are now. Potentially Brexit has had a little bit of a spanner thrown in the works with the court ruling that it needs an act of parliament now to be able to negotiate Brexit. Potentially that could be rushed through in sort of under emergency legislation in sort of 1 to 2 days. But it's going to be very interesting to see if obviously the pro-Europeans look to try and delay this, and then obviously that brings into jeopardy the 31st of March date that Prime Minister May has sort of stated she'd like to invoke Article 50, which will then give the UK 2 years to negotiate its exit. But in terms of Europe, it's sort of showing a little bit of signs of sort of growth coming through. Some pretty interesting elections potentially coming up there this year, and it's going to be interesting to see if this popular sort of vote against the sort of establishment continues in Europe. And if that is the case, then it could be really pretty interesting for the euro. Here in New Zealand, again, the economy is pushing on a pretty reasonable rate. You've got a pretty low sort of unemployment rate. Economy is pushing on around sort of 3%-ish. You had a really big boost coming through in the last sort of 2 to 3 months in the sort of dairy sector, and that's still yet to really filter into the economy, but certainly should give a pretty good boost. And it's going to be interesting to see how the New Zealand market sort of trades over this sort of 12 months. Certainly the equity market looks in reasonable shape. Pretty good dividends coming through on some of those shares. And those really have been a very welcome relief to some of the savers who obviously have suffered with the low interest rates and on bonds. So if you'd like to discuss the income options that are available here, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.